Thank you very much. It's a pleasure to be here and talk to people both in Perth and the Gold Coast. I'd like to say that in oil and gas over the last 6 or 8 months, haven't really felt very much like a star, with oil price dropping from about $60 to $20 a barrel. But I think tough times has meant tough choices, and sometimes it's a good thing. And I think what we've done as a company is basically reassess where to go in this sort of environment. And really what we've done is exchange blue sky for brownfields and cash flow, because we really believe that it's going to be hard to see some of the bigger projects get off the ground offshore unless you're a major oil and gas company. But there's a lot of really good opportunities onshore. And also with lower oil price, I think what we've seen of late is in the US has been a lot of unconventional oil and gas, which is really sub-economic at less than $50 a barrel, and a lot of those birds are coming home to roost. So our focus has really been from offshore to onshore. We've managed to pick up some existing cash flow, which is really important to us, but it's also cash flow with reserves growth. And what we've done is go away from high-risk exploration to lower-risk exploration, and also opportunities that are closer to appraisal and that can be rapidly commercialised, because I think that's the important thing. We've seen some outstanding successes offshore that have failed to be commercialised because the costs are too high and the lead times are too long. But I think what a lot of people are missing now is that it's really important also to have low emission hydrocarbons. I think what we're going to see over the next few years is that oil and gas that's produced in a way that's environmentally sustainable is going to be much more favoured. And also a lot of people don't really understand that the hydrocarbon reservoirs that we produce can also be great sinks for CO2, and they can also be great storage opportunities for hydrogen. So that's really, if you like, the longer term play in oil and gas. So what I'm hoping to show you today is where we've positioned ourselves in Austria is a very unique opportunity, and one that we hope to deliver on as we move forward. So as Nicholas mentioned, very small market cap, but look, we're hoping to improve on that fairly rapidly. Obviously we took a big sort of kick in the guts with COVID. We bought an asset at $64 a barrel oil price, but we were able to hedge. We bought our first asset in December, and we've been able to hedge quite a bit of our production around $50 a barrel. So we're basically an Aussie listed company, but we're basically going further and further into Europe. Our operations and technical team are now based in Austria. So I've been very lucky, sort of caught up in bunkering up in Perth, where I've got a very good operations team and technical director and CEO based in Vienna. And the good thing is, throughout COVID in Austria, we've been able to conduct our operations, work over wells, and continue to produce. The other important thing to note is that we operate all our assets, and that's really important in terms of managing how we move forward. So as you can see, we've got quite a big spread in terms of our geographic focus. I won't talk too much right now about Austria. Basically what I think we have there is a very unique production and exploration position, and I'll explain to you why. In Romania, we've been there for quite a while. We operate there. We've managed to secure funding from a UK AIM-listed company that's enabled us to drill wells and shoot seismic. And we recently drilled and tested a well in what we call the Parta area, which is also very well positioned in terms of both prospectivity, infrastructure, and a high gas demand. We're offshore Italy. That's a little bit of a legacy asset that we've actually hung on to. We really like this opportunity. We were lucky enough to secure a really good farm in about 1.5 years ago, and then the Italians ministry decided to put the whole industry into remission. So we've had a moratorium on oil and gas exploration and production and that'll probably won't end till third quarter of next year. But look, this is a really great brownfields opportunity. We see a lot of potential here. It's a company maker in its own right, but in a way we don't have to worry about this for now. It's kind of a long-dated option, and that means it enables us to concentrate on what's in front of us in Austria. But we're hoping that'll come back probably towards the end of next year. So it has been a transformational period for us. 2 years ago, we were totally offshore explorer. In late December, we managed to buy an oil field in the Vienna Basin. It's producing around 310 barrels a day. Last year, it's producing around 310 barrels a day. This year, it's been producing that for about the last 5 years. So what's very unique about this field, it's a very, very stable, very low decline. And that's, buying that field has made us only the third production operator ever in the history of Austria, which is pretty remarkable. But as you can see from that photograph, it's a pristine environment, surrounded by agricultural land, and we're welcome. I mean, we can put together a proposal to go drill a well and be active on the ground within 3 to 6 months. We're now in the process also of being offered exploration acreage, which is in another part of Austria. And it's really important because the acreage we're actually acquiring is surrounding some producing fields that we'd like to buy. And it's basically the seller of the field that we already bought our little oil field from, and we're positioning ourselves to buy further oil and gas production in Austria. And I'll explain to you why we think we've got a competitive advantage. So with the field is also an operations team. So that field is being produced by a team that we actually acquired from the previous operator, RAG. They now work for us, but it's a very collaborative deal with RAG. RAG was historically a joint venture between Mobil and Shell. They sold their interest to 3 gas utilities, and they've gone from being an oil and gas producer now to focusing on gas and basically gradually wanting to get out of oil. That's not their core industry. So what they want to do is basically either transmit gas or store gas there. They have about 10% of Europe's gas storage capacity. As I mentioned earlier, we recently drilled a well in Romania. It was a good result in terms of a technical result in terms of what we found. Unfortunately, the productivity has not been up to where we wanted it to be, so it's probably going to require some further testing. So why are we in Austria? Well, it's a world-class oil and gas province. Most people wouldn't even have heard that Austria is an oil and gas province. The two areas are either around the Vienna Basin, near Vienna, on the other side near Germany, what's called the Molasse Basin. So the two other companies there, one is OMV, which is a national oil company. They started in Austria about 70 years ago, and now they're producing in Austria around 20,000 barrels a day. In the rest of the world, they're producing around 450,000 barrels a day. RAG, who's also near us in that area towards Germany, where we're acquiring the exploration acreage, they're basically looking to get out of oil and gas. They've tried to do it historically. They tried to sell to OMV, but OMV said, we'll take the assets, but we don't want the people. So that didn't cut it with the mining authority. So as a result, with buying a little oil field over there near Vienna, we've become only the third producer of oil and gas. What's happened now in the Molasse Basin is RAG has basically gotten rid of their exploration acreage. They had recently spent about 40 million euros acquiring 3D. When I say recently, about 5 years ago. We've actually purchased that 3D data set on a lease basis, and so we've been able to evaluate all the acreage around their existing fields. And so now you can see those little grey blobs on the left-hand side of screen, and they're actually exploration areas that I'll talk about a little bit later on. But look, our goal here is to get up to around 2,000 barrels a day, and we think between our existing assets in the Vienna Basin, where we're connected to the Austrian refinery owned by OMV. That produces 230,000 barrels a day. So the country produces only 25,000 barrels a day. So when fields were getting shut in the US, our oil kept on flowing, and there was no issue because obviously it's a very strategic asset for the Austrian government. So look, these are the Zisador fields. What you can see is a nodding donkey there. In the behind you can see vineyards, which we own. As I said it earlier, it's a very unique opportunity, very well-maintained assets. They've been producing since 1935. We've got about 0.9 million barrels of reserves left in this field. They're developed reserves, but there's a very large appraisal potential. We've got 34 wells in the ground, producers and injectors. But importantly, the capacity of this field is to produce up to 4,000 barrels a day. And it's directly connected to a pipeline, at the OMV pipeline. So you can see that the graphics there, that we're actually exceeding, if you like, the most likely production expectation that was recently audited. And that's very important because it gives everyone confidence that these fields will continue to keep producing. So what you can see in that cutaway is basically a multi-layered field. And the reason they've been producing so long is because they started at the bottom and they gradually produced as they went higher and higher. And that's enabled them to maintain a stable flow rate. And that's what we call the neogene reservoirs. Deeper, there's some areas called the Fluche, and that Fluche reservoir has got a very large in-place potential. So what's unique here is you've got their existing infrastructure, but down to around 1,200 metres, we've got a very large opportunity that we're now evaluating with state-of-the-art 3D seismic. And we're starting to see things that are quite significant and that could be very material and very, very economic. What's very nice about this area is we only pay 1% royalty. We basically trade oil on Brent, which is the most marketed oil, if you like, on the planet. But what we're seeing is great opportunity to expand our production and our reserves. So what's yet to come, we're about to secure exploration acreage in Upper Austria. That's in the Molasse Basin. That's over near Germany. And what's unique about this is until RAG pulled out and they held that grey area where there's 3D seismic, and we've basically been able to walk in with existing prospects, existing data. We've basically cut the exploration life cycle by about 3 to 5 years, and we've basically been able to access very expensive data that we can now utilise. So we've basically got RAG's team, we've got their data, and we're being offered those yellow areas which surround those red and green blobs, which are RAG's existing production infrastructure. So it's a very unique situation where you've got a good portfolio, high success rate, existing walk-in prospects. This basin's also got proven geothermal potential, and we're also in the process now of finalising an MOU with RAG to access their infrastructure. So we know when we go and drill some of these opportunities, we won't be waiting 2 or 3 years to produce from them. We'll be waiting for maybe 6 to 12 months to produce from them. And some of them I'd have to characterise more as appraisal or field extensions rather than exploration. So that's very exciting for us. What you can see in that map and then in that cross-section showing you seismic is basically a number of, in yellow, a number of prospects that are ready to drill. What's next to them in green is existing fields that are producing. So these aren't, difficult exploration opportunities. These are basically step-outs from existing fields. In fact, some of these we may even be able to drill from side tracks from existing wells that are owned by RAG. So this is very, very rare to get this sort of opportunity, and the drill depth is relatively shallow, only 1,700 metres, and very high probability of success. This shows you basically our some of our gas opportunities. Again, what you can see there is some producing gas fields that light up on seismic. They're what we call AVOs, or direct hydrocarbon indicators, and that's when the seismic is actually seeing differences in density within the reservoir. So you can see very similar signatures on some proposed gas prospects as you can see with the existing fields. but we've got about 20 of these prospects. Now, obviously, we'll only drill 4 or 5 of those. A lot of these we'll be able to farm out, but again, a very unique opportunity. In this case, I'm showing you 2 prospects. One's an oil prospect, which is probably around 10 million barrels of potential. The other one's a very shallow gas prospect, up dip from an existing discovery. Both of them have deeper targets that are geothermal. So we've got a very good geothermal reservoir that extends across from Munich, which is very highly drilled, and it's a lookalike. So we can not only drill a well and find oil and gas, but we can also deepen wells and actually get into geothermal potential. So again, a very nice opportunity and very unusual, and with lots of infrastructure. So look, our strategic objectives are pretty simple. We've got existing fields in Austria, which we have a good opportunity to build reserves and production. So we can build up from about 310 barrels a day over the next 12 to 18 months. And what we'd like to do is put a drilling program together to do that. Some of them are just actually workovers opportunity, which we call behind pipe. And what we hope to do early next year is get into a program where we can chase some of these, probably for our $300,000 or $400,000 to basically increase our production further by 15 to 20%. So that's money for jab. But also we've got deeper targets that we can access and the existing infrastructure to basically be able to deliver those targets. We're right on the edge of being able to announce the expansion of our exploration portfolio. We've had it offered to us by the Austrian authorities. We've got prospects that are drill ready. So it's just walk-in exploration that we can farm out or fund through cash flow. And right around that exploration acreage is basically the production assets that RAG want to get out of, their existing oil assets, and basically they brought us in because eventually they'd like to sell to us. So it's a very, very unique opportunity. And then finally, obviously one of the things we need to do is get better understanding of our assets and access to more capital. So I think logically all our assets in Europe, and probably will be heading to a UK listing or a European listing. Finally, I just want to leave you with one thing. Most people think about oil and gas and they see it as an industry that's about to die. When you look at that picture, you can see our oil and gas infrastructure. Behind what you see is the largest wind power generation facility in Austria. When you can't get power into the grid because there's too much power around, you can convert to hydrogen, and then you can actually inject that hydrogen into existing reservoirs. Also, if you look at the CO2 targets, we need to take CO2 out of the atmosphere. Where's the best place to put it? Most economically in the depleted reservoirs. And Santos is already talking about doing that in the Cooper Basin. The difference for us is our industry is coincident with where the oil and gas fields are. So it's a multifaceted opportunity, and we think it's a game changer for us. Thank you for your attention.
Thanks, Ian. Thank you. Very interesting. An investor has just texted in a question: what can ADX do to retest its gas discovery in Romania?
Yeah, well, there's 2 things we're doing. First of all, we've managed to get a new 3D seismic that we've reprocessed. So we want to better understand what's happening structurally and what the ultimate prize is. So that'll probably take a few weeks. We've had proposals to do an acid frac, but again, what we want to do is see what the prize is, or reevaluate the prize before we invest more money in an acid frac.
Fantastic. And finally, I think you said at the outset, we've exchanged blue sky for brownfields and cash flow.
Yes.
Can you give us, without breaching any ASX rules, can you give investors a feel for what the cash flow sort of potential of these assets is? Yeah,
look, I mean, the existing field that we're currently producing from generates approximately 5-6 million euros per annum of cash flow. The costs currently are around the 3 to 4 million. If oil price gets back to sort of in the mid-50 range, basically our revenue will double. But we also see potential for significantly increasing both reserves and cash flow there. The assets that we're targeting are probably going to have, there's another 1,500 barrels a day that we think we're ideally positioned to purchase, and that's part of the reason we want to list, and because it'll in Europe, is to attract funding from Europe for European assets. But those sort of assets would generate sort of 5 to 10 million euros of a net cash flow per annum.
Excellent. Thanks very much. Please thank Ian Charkos.